Well, I think so. You use the word signal. I use the word tell. Simon Johnson, who you mentioned earlier, he and I do this podcast, and we just put one out on the mega IPOs just this morning on power and consequences. And I think the overall equity markets, like Alan Greenspan's 1990s equity markets, is funding this big burst of infrastructure build in AI. $750 billion this year, up threefold in just 2 years. And to scale that, that's about 2.5% of our gross domestic product. And so then you have like SpaceX go public and maybe Anthropic and OpenAI. We'll see.
Yep.
I think that's somewhat of a tell. Google raising $85 billion. And the markets have to digest this. And then there's valuation questions, at 100, 140 times revenues without earnings. So this will all sort out, but it also might be that 6 months from now we look back, it was fine, but there's an equal and better chance that 6 months from now we look back and we say, as all those venture capitalists and sovereign wealth funds start selling those shares, that you see a downward pressure on not just SpaceX, but the whole market.
You're up there at MIT, Gary, and as I understand, there's some pretty good engineers and computer geeks up there as well. What is kind of your understanding? What's the understanding up there at MIT just about AI today? Because initially, we in the marketplace, we just said, let's just buy the chips. But there's more to it than that. Market seems to be trying to discern some winners and losers. How do you guys think about that?
Look, there's thousands of remarkable research scientists and faculty here, so I can speak for just maybe myself. And I think AI is the most transformative technology of our times, but we've had this before. If you go back over the last 200 years, from canals to the internet to this. And what happens, and Ray Dalio talks about this too, we get an overenthusiastic financial market support. And then at some point, we build so much infrastructure, we have a reckoning. And I think that's what you learn from history, is that we tend to have reckonings. Now, is it a calamitous reckoning like with railroads in the 1870s, where we had disastrous recessions? Is it a reckoning like after the 1920s? We had a big boom on electrification, mostly in utilities. Or is it like the internet, where you have a modest reckoning, still a recession? And so AI is transformative. One last thing, Paul, I think of it a little bit like a parlay bet. The prediction markets, you have to have two things. You have to have AI, hyperscalers, and OpenAI be able to build the revenues. Right now, they don't have the revenues. And two, you need to build productivity in the economy enough for the capital markets to overlook all the disruption, all the companies that are going to be disrupting value with a successful AI.
We continue with Gary Gensler, the former chairman of the Securities Exchange Commission, his commitment to Sloan, where he's won a couple like student trophies.
Is that right?
I didn't fall asleep in his class trophy.
Yeah.
Does a wonderful podcast.
Oh, God, Tom, you're too kind.
He does a wonderful podcast with Simon Johnson. I want to go two questions here, Gary, quickly. A lot of people went retail on Bitcoin and they enjoyed buying it 100 or 110. What do you say to the retail crew that have losses in Bitcoin?
Look, markets both trade on sentiment and fundamentals. And the challenge for those purchasers is what are the fundamentals? We were just talking about that with SpaceX, but there's a real business there. I mean, Elon Musk has built a real business. It's just a question of where do you value it. Here, the ebb and flow of any purchaser of Bitcoin has to think, all right, what are the real use cases? And particularly to be even more careful with the rest of that asset class, crypto. It's like meme stocks. You have to be very careful that you're not trading just on sentiment.
I'll refrain from editorializing here for Tom Keene. I've got a chart from Jeff Jacobson. Thank you, Zero Hedge, for this. Gary Gensler, to me, it's manipulated. They do an IPO, which is 5% of the SpaceX float. They tranche it out August 11, 21, September 10, September 25. They get 50% of the stock out October 10. They finally get out to 60% of the stock out December 9th. Is it just a manipulation of folding the stock into the public in a way that keeps the fervor up. It doesn't seem like the old days where a company went public.
Well, so here's the other thing. NASDAQ made an accommodation in how they do their index, the NASDAQ 100. And once there's 30% of that stock outstanding, which might happen as soon as mid-August after the earnings release,
Right.
once that happens, the entire free float is counted into the indexes, which put out Elon's 42%. 58% might fold into the indexes, and then there's a buy. But here's the other side. I call it the great rebalancing. All those venture capitalists and sovereign wealth funds, they're going to want to take risk off the page. I mean, Tom, they're not going to want to just leave their profits in and say, let's go for more. They got to take, a third, a half, maybe 3/4 of the risk off the page. And so there's going to be a lot of selling pressure too as these lockups come off.
Gary, as we think about the continued rollout of AI across the economy, what do you think the regulatory framework should be going forward?
Look, I think with any great technology, a society adapts and says, listen, there's public goods and we have to promote them. We call it responsible AI. I started doing work on this 7 years ago and tried to move the ball on that even at the Securities and Exchange Commission. I think the most that's happening is at the states about protecting people against bias, protecting people's privacy, of course, the accuracy of it. But when the algorithms are making decisions on our behalf, who gets health care, who gets a job, who gets credit, it's important that they are accurate. And I think that right now, this current president is more into let's just support a competition with China. Let's, as they say, just take off the regulatory guardrails. And yet, I think society is reacting and starting to say, what about my kids? What about addiction? What about the use of this? What about my lost job potential, maybe? And so it'll be a very interesting next several years in terms of the politics of all this.